Orders growth during December. Job creation was broad-based across the manufacturing sectors at the end of 2014. By market groups, the sharpest expansion level was consumer goods sector, followed closely by intermediate goods sectors. Meanwhile, investment goods posted the slowest increase in input. Investment goods producers also saw weakness in payroll numbers with moderate expansions in December there. And some commentary from Dr. Williamson here. The manufacturing sector saw growth activity lost further momentum at the end of 2014, but didn't stop factories from enjoying their best year since the Depression. Even with, in my word, not his, he says, recession, during the slowdown, the manufacturing output is rising at a robust pace. When factories keep busy, higher production should keep the overall economy remains on a firm upward trend. The big question is, of course, whether the pace of expansion will continue to weaken as we move into 2015. Companies are citing greater uncertainty about the outlook, especially on the export market, leading to some scaling back of expansion plans and a greater reluctance for customers to place orders compared to earlier in the year. In that respect, December saw growth of new orders lift slightly higher, suggesting the environment may already be starting to improve, and lower prices of oil and sustained flow of better than expected economic data in recent months. If global demand remains subdued, a buoyant domestic market should therefore help sustain factory growth there. There's no doubt in the U.S. we are seeing evidence of this, and also we will look to what adjustments are coming. This is Eurozone here. I'll go over it very quickly here. The Eurozone manufacturing PMI at 50.6 in December, the flash at 50.8 in November, and the final at 50.1. Doldrums continue in France. In Italy and in Germany, output remains modest. Eurozone manufacturing sector ended 2014 on a subdued note. Eurozone manufacturing PI was slightly up from November's low of 50, but edged down from the flash estimate of 50.8. The average PMI reading over the final quarter, that's Q4, was 50.4, puts the manufacturing sector on course for its worst growth and outcome since the current recovery started in Q3 of 2013. December saw slower output growth during the current 1.5 year period. The performance of the big three manufacturing nations remains subdued. The downturns in France and Italy continue as both were hit by declining influx of new business. France subsequently fell back to the bottom of the PMI league table. Manufacturers there scaled back production to a great extent since July. The performance of Germany also remained subdued, although there were some positive signs as its PMI rose back to 50. No change mark. Elsewhere, the currency union, Ireland, Spain, and the Netherlands were all reported solid improvements in performances, while Austria and Greece saw modest yet slower deteriorations. Manufacturing employment rose for the fourth successive month in December, with job creation registered in Germany, Spain, the Netherlands, Ireland, and Greece, the first increase in Greece for 7 months. Greece had been in a depression for a very long time. The overall increase in workforce meant firms were able to maintain production growth and further inroads in backlogs of work. Cost pressure remains on the downside during December. Lower petrol prices will also help Europe. Selling prices also fell during the latest survey. Only Spain and Italy reported higher output charges, and only marginal there. And we look at some of those in the 4 months. All the domestic markets remained lackluster. Comments from Dr. Williamson. The eurozone factory activity more or less stagnated again in December, rounding off a year in which saw initial promising look upturn fade away. In part of this was due to really the eurozone has not been sound in a number of years coming out of the Depression, and prior to the Depression it didn't look that great. He goes on to crisis in Ukraine and renewed lack of confidence in the ability of Euro area policymakers to revive the regional economy appears to have been the main catalyst to fuel increased economic uncertainty. Some promising signs, notably in Spain and Netherlands and in Ireland. These are very, very small countries. Where it really matters is in France, Italy, and in Germany. Austria and Greece, well, Austria again is a very small country, so is Greece. The ongoing weakness of German manufacturing, the largest in the zone, also remains a major concern. We should hopefully see growth pick up in the coming months there. Well, the energy prices there will help them out some, and of course the Russian Federation will be making bargain basement deals, fire sales. This is from HSBC, the China Manufacturing PMI. Chinese manufacturers signal a renewal deterioration in operating conditions at the end of 2014, with both output and new orders falling slightly on the month. In contrast, the new export businesses continues to increase in December. In response to lower total orders, firms cut their workforce numbers again in December, albeit only slightly. On the price front, both input prices and output changes fell at the sharpest rate in 9 months. Adjustment for seasonal factors, the HSBC Purchase Managers Index PMI composite index snapshot was at 49.6%, down from 50%. The weakest PMI reading was a partial result of renewal fall in new business volume placed at Chinese manufacturers in December. You got to remember also the Lunar New Year is coming up. Manufacturing employment in China declined again in December, therefore extending the current sequence of job shedding to 14 months. However, the rate of reduction eased to the weakest in 5 months, a very good sign there. Lower production requirements led to the first reduction in buying activity since April. There was always a fear that the Chinese economy would in fact overheat. And the commentary here is the HSBC manufacturing fell to 49.6 in its final reading for December, down from 50 in November. Key points: output and new orders both declined slightly. Job shedding persists, and it should in fact persist there. That does it for the HSBC. We bring a number of these so we can get somewhat of an outlook. Now here's J.P. Morgan. They have the global manufacturers PMI, and it's produced by J.P. Morgan and Market. The growth of global manufacturing sector continues to moderate end of 2014, with production and new orders both rising at the slowest pace in almost 1.5 years. At 51.6% in December, down from 51.8% in November. The PMI composite index produced by J.P. Morgan and a marketing association with SIMS. Well, we won't get into all that. Global manufacturing production rose for the 26th consecutive month in December. North America remains a prime driver of the expansion. There's also signs of further slowing in North America. However, the rate of output expansion eased in both the U.S., 11 months low, and in Canada, a 3-month low there. And the trend held up better in Mexico, with growth accelerating to 2-year high. Mexico has improved over the years. I can recall when there was major problems there. Among the Asian manufacturing economies, Indonesia, somebody to always look at, and South Korea were all reporting contractions of production, while China stagnated. India continues to perform strongly, with growth hitting a two-year peak. A modest expansion was also seen in Japan. The eurozone manufacturing production rose only marginally, and that's to be the case. We already talked about that. Won't spend time there. Elsewhere, growth slowed in the UK, in Turkey, and of course in the Russian Federation, and Brazil contrasted. The global PMI showed signs of stability in December, and we like to see that after pulling back from a more elevated level at mid-year. Notably, output gains speeded in recent months, and near-term outlook for production is positive. As of a slide of oil prices, are key to everything here. And we look at some of these. We'll look at these out. Global PMI is 51.8%. I'll just give it December. 51.6. Output is at 52.2. Dropped 10%. New orders at 51.1, and new exports at 51. Employment at 51.2, the same it was in November, and input prices at 51.3, a little better increase in a slower rate, and output prices at 49.9. Global manufacturing employment rose steadily in December. Job creation was seen in the U.S., the eurozone, Japan, the EU, Canada, Mexico, South Korea, Brazil, Poland, the Czech Republic, and Turkey. So that does it there. And if we look at the share of global GMP, I guess we can look at these numbers very quickly here. Japan at 8, let's see. The United States after January 25.2% before that. Anyway. And let's see here. 8.8% share of global. Oh, I see. Okay, China got 8.4%, Japan 8.8%, the UK 4.5%, France 4.2%, and we'll skip some. Canada 2.3%. None of these things in order. The Russian Federation 1.8%. This is the global share of the pie, so to speak. And I was looking here, Brazil 2.1%. This is the market producers index, and so forth and so on. It goes down to South Africa 0.6%, Vietnam 0.2%, Israel 0.3%, Greece 0.4%, and this is the market. So that's the global outlook there. Let us continue on here. We'll do the Russian PMI. The Russian private sector output fell in December, and inflationary pressures continue to intensify. Seasonal adjusted, this is the HSBC Russian Service Business Activity Index, rose from November's 5.5-year low to 45.5 to 45.8 in December, but still indicates sharp contraction in Russian service sector. Meanwhile, manufacturing output was unchanged. Now, that's a positive thing, given all the other problems there. The Russian composite index posting 47.2%, down from 47.6%. Service sector business expectations sunk to the lowest on record in December from the second month running. There in the next 12 months there. Inflationary pressures continue to intensify in December, mainly to the weakening of the ruble. And new business flow continued to weigh on the performance of the private sector. There isn't as large a private sector in the Russian Republic. Here's the key points. Composite output index fell to 7-month low, 47.2%. And, of course, service business in a slump. The commentary here is on the Russian economy there. This is from Alexander Moroskov. He's the chief economist there. Russian economy accelerated its contraction in